All right, good evening, everybody. We're going to get started now. Welcome to another Think Realty live webinar. Looking forward to this one. I know at Think Realty, we deal a lot with alternative investments, specifically real estate, but really wanted to have our guests on tonight because it's a very exciting opportunity for everybody who is an investor, especially when we're talking about looming recessions, we're talking about uncertainty in the marketplace. Diversification is always your best bet, your best friend in uncertain times. And the guys we have on tonight are going to be talking to you all about oil and gas mineral rights, the advantages of using it with your own personal funds, 1031 money, or even your self-directed IRA. So before we get started, though, just want to make you guys aware, we had a really great event in Houston last week. Our next event will be in Tampa, July 13th and 14th. Looking forward to seeing as many of you there. Check us out at thinkrealty.com for all things alternative investments. We are the voice of all things alternative investments in this space. And without further ado, I want to welcome on here Carson Jones, Chris Cothran, and Paul Cothran with Carson Passive Investments. They're partnered with Falcon Production. Guys, welcome tonight. Welcome to Think Realty. Carson, I know that we spoke a lot last week in Houston at the Think Realty conference. Really was excited to have you there. And again, just to bring some more diversification to what we have in terms of our audience, oil and gas is something that is, I don't want to say foreign, but it's somewhat new because we deal with a lot of single family and multifamily notes, et cetera. So really excited about the presentation tonight. And you guys have a wealth of experience, a wealth of years in this particular space. So anytime we get guys that are reputable, that have been doing this for a long time, I get excited because it's going to benefit our audience. So take it away, gentlemen. I look forward to the presentation. I'm going to mute myself. I'll be in the chat with some information on Think Realty. Audience, if you have questions, please use the Q&A. Makes it a lot easier to stay organized and make sure that we get everybody's questions addressed. But Carson, take it away, my man. Looking forward to it.
All righty. Can everybody hear me? Can you hear me?
Hear you loud and clear.
All right. Absolutely. Just wanted to do a quick introduction of our team here. If everybody can see the screen here, we have, is Jerry able to chime in? He is our chairman of Falcon Production. I'm not sure if we can hear him or not, but anyway, Dr. Jerry Bailey is a former Exxon Arabia CEO. He's the chairman of Falcon Production. He is overseeing the project, and I guess he is unable to chime in at this point, but anyway, I will move on to Chris. Chris is right here. He is the petroleum engineer and managing member. He's done a lot of the legwork going into this presentation, been out to the field, done a lot of the due diligence on the wells and stuff like that. This is me right here, Carson Jones, partner finance, passive investments. Anyway, I'm a partner on the deal. Paul Cothran is the land manager. And then we have our geologist here, William Chesser. He's got over 50 years experience and all that. We have our consulting firms, Miller Consulting and accounting for the project, Petro Ledger. So anyway, I was hoping Jerry could chime in, but I'm not sure how we go about doing that. But anyway, Jerry, are you here?
No, he said his phone is muted, so I'm trying to figure that out.
Okay.
I'm not sure if that's on our end or if there's something he needs to do.
Okay.
Well, I maybe Kurt can look at that and see if there's something to do there.
Okay.
But let's keep going.
Okay, let's go ahead and delve into this, guys. You know, before we cover the highlights, this is the 506C for accredited investors only. You know, people looking to do a 1031 exchange, consult your 1031 exchange advisor. You know, before investing in anything, speak with your financial or tax advisor. But on into the highlights, one of the major ones about this deal is we got 24 million barrels in an Exxon study, 24 million barrels in place. projected annual cash flow is 20% plus average yearly cash flow. You get a tax write-off in your first year, and then you get a depletion allowance in further years. Like I said, it's 1031X eligible and IRA eligible. We have a lot of people invest through those. You got a 2x to 7x equity multiple, and we'll dive a little bit farther into those numbers here in a second. So, there's Dr. Bailey.
Hey, is
Well,
that Jerry?
I was trying to do it by the phone, so at least I got in, I think.
Well, let's go back to that slide with Jerry on there.
Okay, hold on 1 second.
So we can start fresh here. There we
This
go.
is Dr. Bailey on the line. He is the chairman of Falcon Production, and he just wants to speak for a second or two, or a minute or two, and go from there.
Well, I appreciate you giving me a few minutes. I apologize for all the other inconvenience, but at least I'm happy to say a word. For your listeners and your audience, I consider myself, I'm a longtime Texas oil man, I guess. I've been in this the entire career in the oil and gas business. And I've done U.S. and international work with Exxon. And lastly, as you said, I was the former president of Exxon for the Middle East, or we call it the Arabian Gulf. But I like to tell people when I speak about the energy industry that people need three things. They need food, they need housing, and they need energy. And with those three things, that keeps us all running. And really right now, there's energy to be had. It grows, obviously, the need with the population growth in the world. So there's a lot of it out there needing. There's been a strong comeback since the COVID interruption. We're through that. Demand is scheduled to probably outreach the available supply starting at least in the second quarter. And the U.S. particularly really needs to regain independence on the energy front because we've got plenty of oil to be had. I'm involved in a number of U.S. and overseas projects now, and I think that I know from past work, I know your guest there, Paul Cothran. He and I had worked together. He did some drilling work for me in the past, and I was glad to join in on the project he has. But he'll talk about that. But there's so much oil left to produce in the U.S. There's thousands and thousands of shut-in wells that need to be opened up. And I'm talking about private stuff, just things that are owned by many small groups all over the country. The thing about it is when people buy into some of these smaller operations, you actually become an oil man or oil lady or an oil person or whatever. You can actually go out there. I tell people, grandma can put her hand on the top of a well and say, I'm an oil lady. And that's kind of interesting because you do share in the the rewards and the results of the projects. The field they're going to talk about a little bit for you is a former Exxon field. People say, well, if it was Exxon, why didn't they stay with it? Being an Exxon person, I realize there's a lot of pecking order in this business. Exxon's way up at the top, obviously, and it goes all the way down to the mom and pop operations. Exxon typically will just take the quick and easy oil when they develop something, and then they move on to bigger things or other things. So they leave a lot behind for people. And that's the thing that those of us who are in the business know we can go after that. Without just boring you with all of my take on it, I think I can summarize it that in the business, people in their investment world, everybody ought to have a little bit of oil and gas somewhere in there because it's not going away in the lifetime of everybody that's on this call. And it's going to be needed and used, and it's there for people who have the smarts to get in a little bit in it. I read one place that 1 out of every 6 persons in the United States is either in the oil and gas industry or they have friends and neighbors who are. So it provides a lot of employment, covers a lot of areas, and it's something we all have to have. So if there's anything you're going to be into, you don't buy everlasting light bulbs. You buy something like oil and gas that gets used up and has to be replenished, and that's where the value comes in. So I'll leave it at that. I've taken a lot of time.
You're doing fine.
Thanks, Jerry. We
Go ahead.
We appreciate you calling in, Jerry. Good words from a veteran oil tycoon there, and we're really proud to have Jerry on board with us. He's been a big help. His expertise and his knowledge are just unimaginably helpful on this project, this type of project, especially. Jerry just brings a wealth of experience and knowledge to us, so we're really happy to have him on board.
Absolutely. Thank you, Jerry.
All right.
I guess from there, we'll go ahead and, jump into the, we were going over the highlights previously. So, we had talked about the 20% plus average yearly cash flow projected, the tax write-off and all that. This is diversified, it's multi-well. There's an Exxon study with 24 million barrels in place. So anyway, I'll go ahead and jump to that next slide and go into that. As of right now, this is currently producing 40 to 45 barrels a day. This is on a 4,400 acre lease. Expected production or projected production could be 50 plus years. Exxon produced 70 plus years. On this one, you have immediate liquidity. This comes like the title of a car. You're going to get working interest title from the courthouse, and you can sell it at any time. There's two phases of this project. We have a rework phase, an acquisition and rework phase. And then later on down the line, we'll have new drills, and we can do up to 20 of them with 4,400 acres out there. So anyway, I'm going to go ahead and jump down into the economics of this. We have the economics of the acquisition and rehab. So taking over the leasehold and getting the leasehold, and then the 6 to 7 reworks, it's $60,000 for 1%. And your return down here, cash flow, is about $28,327. That's just projected. There's some lead up into that. And then we have the second phase. This would be if, we're going to build a new unit behind it. What we're going to do is do new drills, because we have 4,400 acres. For 2 new drills, it'd be $80,000 for 1% working interest. Low end would be $96,000 a year cash flow. High end is 192. People who participate in the first portion of it, the acquisition, will have first right to refusal on the new drills. So you're looking at a total of $140,000 total investment if you did both. Here's a little graphic on, back in 1950 or roughly 1950, when the original wells were drilled, ExxonMobil did a vertical drill. We're going to be able to do horizontal drill, which explains, that we have the potential for on that last slide on the economics. So after that, I think I'll let Paul or Chris take over. And, if you have anything you want to add to that, Paul, let me know.
Well, this field has been producing for 70 years, and about 12 million barrels have come out of it already. And so Chris has come up with a plan to drill this field horizontally, which is a technique that wasn't around when Exxon originally developed this field back in the 50s. It's, it's an 80s vintage technology. And so this is our plan. And Chris is going to take us through a little technical presentation on that. So Chris, if you want to get started
Okay,
on that.
I'll stop sharing my screen and let Chris kind of take over. Okay.
All right. Here, just give me a second and I'll have this set up. How's that look?
Looks fabulous.
All right.
Yep,
So
good.
I guess to get started, I'll just reintroduce myself. I'm Christopher Cothran. I'm the petroleum engineer for Falcon Production. What we're going to be going through is kind of a quick overview of our Raspberry unit drill program and development program. So the name of this unit is called the Raspberry unit. It's an old Exxon field. It's located just outside of Crowell, Texas, which, if you aren't familiar, is about an hour west of Wichita Falls. So they started doing drilling in 1955, and when Exxon was developing the field, they did their big oil in place field study and determined about 36 million barrels of recoverable oil in the field. Like Paul mentioned, about 12 million barrels have been produced. So there's 24 million barrels remaining. And we believe that through our development program and the new drills, we can recover an additional 4 million barrels. And so there's a few avenues that we're going to pursue to accomplish this. The first avenue is just kind of a re-energizing program where we bring online some of the shut-in wells that haven't been producing. And that's a really simple process that we'll get into here in a second. We can improve the disposal system, which will allow us to move more fluid in the field. There's also the possibility of deepening some of the shut-in wells. We have some upside potential in deeper zones that we feel pretty good about. And then there's the horizontal drilling program, which will kind of be the big fish of the field. So our first kind of phase going in here is going to be our maintenance and workover plan. And essentially what this would consist of is taking 6 or 7 wells, reworking them, getting new pump equipment put down in them and bringing them back online. It would also require increased storage capacity for water. Part of the field is that it makes a lot of water on top of the oil, and you have to move and displace that water and pump it back into its original formation. And so it takes a little bit of infrastructure. And if we're going to ramp up production, we got to increase our capacity. And then finally, we're just going to need to purchase some new equipment for the facilities, additional oil storage tanks, things of that nature. And I just want to highlight for those of you watching, kind of our thought process here is the previous operator. This is, if you look on the screen, this is kind of a timeline of the production. And the previous operator ended up having to shut in many of these wells just due to the fact that they weren't economic, and oil prices had dropped to, $20 or $30 a barrel. So they started shutting in wells, which is a common practice to kind of salvage the operation, reduce their overhead costs. And then additionally, there's another massive drop off in the production because they had a grass fire in the field that destroyed a lot of the electrical infrastructure. And they never really got things back up and running because shortly after that, COVID hit and oil prices fell even more. So we're kind of positioned in a really good place where the previous operator actually has since prepared all that electrical infrastructure, and oil prices are rebounding up to, I think, spot price today, $72 a barrel, which is a really nice figure. And we just have to get in there and put some of this equipment, get these wells back online, and we can reach that same production rate. They were making about 150 to 200 barrels a day before they had to start shutting in wells. So that's a simple little plan that can easily start making the cash flow really nice in this field. And so just to give a quick overview of the geological environment here as we prep to show you our drilling plan. The geological environment is called a reef. Mounded reef is what it's referred to as. And so you have these kind of reef structures that have these nice tall mounds. And what we're aiming to do is operate in the top of these mound structures because they provide nice little traps for oil. And so you can kind of see this figure here mirrors the actual environment that we're working in. These are some cross sections that are taken from the nearby fields that we're working. The Raspberry field, of course, being the one that we're working in. And you can kind of see this mounded structure in the data that's been collected from these wells that have already been drilled. There's also a nice fault system running between the Canal Creek and the Raspberry field to the north. And that kind of puts us in a nice spot where we know that these two fields are separated from each other.
Hey, Chris, just
Yeah.
a quick note on back on that slide, just for people who don't understand some of the oil field terminology.
Sure.
This cross section is a compilation of well logs. So you want to talk just a second about, you know, what a well log is and how that shows the pay zones and all that?
Sure. So just kind of a crash course on well logs. Once a well bore has been drilled in the ground, you'll run equipment down the hole to measure various different characteristics of the rocks in the hole. One of the kind of main ones that pretty much is in every log is a gamma ray log, which measures radioactivity of rocks. And we know from many years of oil and gas operations what certain radioactive and so that's just kind of one subset of data. There's a lot of different, I mean, I could sit here for hours and talk about all the different kinds of data that you collect from these logs. But once you run those logs and you put all that data together, you can actually create a really nice profile of what kind of the structure of the rocks in your field look like. And that is a lot of times how you determine where you're going to drill next, or what your production is going to look like in the field.
Perfect.
So just a nice little show here of what these wells are capable of and when they were drilled is I have this map here showing the initial production rates on a lot of these wells. So you'll see numbers underneath each one of these little green dots. These are all wells that were drilled during the 50s. And these numbers represent the initial production in barrels of oil per day when the wells came online, kind of their test production, if you will. And a lot of these are really high. You've got 531 on this well, 444 here. This well had 992 barrels per day when it started producing, which is a lot. I can tell you that much. So many of these wells IP'd over 100 barrels of oil per day on just simple vertical drills in the 50s, when the technology was just not nearly comparable to what we have today. This is just kind of second map. Looks a little bit prettier, but it's showing the same thing. It's just a heat map of the general production, these IPs in the field. And what I like to note is that this map kind of mirrors the structure of the field when you turn it over to our structure map. So this is a structure map for the top of what we call the porous Caddo, the Caddo being our primary producing structure or formation for the field. Like I said, you could kind of tell that the oil rates were a little bit linked to the tops of the structures, the darker red parts being the higher parts of the structure, and these green ones kind of being the bottoms of the structure, kind of tailing off deeper. There's also a fault system that kind of wedges in our field very nicely, and that provides a good separation from other properties nearby, so we know that nobody else is going to be getting to the oil in our field, which is always a nice thing to know. Then we have a quick representation of what our drill program would look like. These are just some example orientations or well sites that we would start developing out. And each one of these arrows represents about a 1,500-foot horizontal well that we could drill in, either going northwest or south from here. There's a lot of variability and options that we can play with on our drill program. Oh, and then nice part is that the previous operator, they had kind of started trying to work on something similar. So they already put together 3 of the well pads for us, which is a bit of overhead that we aren't going to have to worry about. So I'm going to show y'all real quick, just a quick cross section of what we're looking at in the structure and how the drilling actually works here. So this white line is going to kind of represent a cutout, if you will, through the field. So if you can imagine that white line is running through the wells pictured here, this is what the formation looks like along those lines. And it wasn't exactly a straight line, but it kind of gives you a good idea of what we're looking at here. So one of the things that, if you can imagine, and Carson kind of gave you the sneak peek of this slide, but if you can imagine that a vertical well penetrates into a formation and is able to produce, 197 barrels of oil per day when it was drilled. What you're actually getting when you penetrate into the zone is about a, what we like to say is a 20-acre radius of production from just this one little section here that's vertical that they are producing out of. The nice thing about a horizontal drill that would be a huge improvement over this, the vertical model, is when you're producing out of the horizontal well, you can imagine on each one of these lines, you have that 20-acre drainage area is what we call it. And that goes vertically through the entirety of this zone rather than just horizontally in this little isolated section here. And then you don't have to worry about the vertical limitations of being able to drain this area because you're going horizontal through the zone. So you have a lot more ability to really capture all of the production that you can get out of this one formation with a horizontal well. So for a quick comparison, if you have a vertical well producing 1,000 barrels a day and it's making a 2% oil cut, then you're producing about 20 barrels of oil per day from that well. And that's about what these wells do now. If we drill a horizontal well, we can up the amount of fluid we're moving substantially. So instead of 1,000 barrels of fluid per day, now you're making 10,000 barrels of fluid per day. It's about 10x. And so at a 2% cut, now you're making 200 barrels of oil per day from a well where originally with the same spacing, you would have only been able to produce 20. And there's also a nice upside to doing the horizontal well because it really opens up the possibility for us to hit any vertical faulting or micro fractures that function as little tiny traps or like pockets for additional oil. So when you drill one of these, you're not just expecting to hit this similar IP of 197 barrels of oil per day. We actually expect it to have an additional 300 to 500 barrels of oil per day just from the micro fracturing in the zone. And that's caused, again, luckily we have that nice faulted structure. Whenever you have these big faulted structures, you often see a lot of micro fractures in the area. So that's kind of the gist of our drilling program. And then we also have our kind of supplementary deeper upside that I had mentioned before, where we could deepen some of these wells. We have a known producing formation called the Atoka that looks pretty good in a lot of these wells. And as you can see, we've tagged it in a few of the wells here. Not all the wells go deep enough though. So for example, the 1403, this would have to be deepened to really penetrate the Atoka the way we're hoping. But luckily we do have a well called the water source well 3 that is it's much deeper than the Atoka that we think could be a good test candidate to test this upside in the field and collect more data on the Atoka. So there's a lot of room to play with this field, and it's really exciting.
Thanks, Chris. Appreciate that. Carson, I'm gonna jump into the next slide here if I can, and
Okay,
let me see.
yeah, let's,
Here, I have to end mine first.
Yeah.
So-
yeah, and your,
Oh, I see. Here. There we go.
Okay.
perfect.
Let's see. Why can't I get this on here? Here. Okay, can you guys see this here?
Yeah.
This is a
Just-
spreadsheet.
You just have Zoom up.
Yeah,
can't
you
see your
just sent
spreadsheet.
Zoom. You have a picture of me up.
Oh. Well, I don't know what's up with that.
Do you want me to share it and then you can cover
Yeah.
it?
Yeah, why don't you
It's-
go ahead and put that next slide up on there, and I'll talk through it a little bit.
Okay.
The slide after the horizontal.
Let's go right here. How about
We're
that?
at the beach.
And go right
There we
there.
go.
Does that
Yeah.
work?
Okay, so I'm a landman with the company, so I just kind of have the overall workings of the conveyance of the interest. And as Carson said, the interest is directly conveyed, so it's transferable at any time. Basically, our project has a $3 million for initial funding, which is $60,000 per 1%. We're only selling 50% of this project. We're keeping the rest of it. And we're invested in this project pretty heavily. So, you know, we have a lot of skin in the game, and I know investors appreciate that. Just as the field stands right now with the workover program and bringing a few more wells online, we feel like this field can be up to 150 barrels a day in just a few short months, less than 6 months, and throwing out a nice cash flow. After that, the drilling program is where the real money is going to be made on this field. We believe that these wells will come in anywhere from 200 to, as Chris said, up to 500 barrels a day per well. So these could be real money makers. This field could throw off over almost $1 million a month in cash flow. So if you're a 1% owner in there, that's going to be pretty substantial. In addition, if you fund into the first 2 drill wells, you'll have the option to drill up to 18 more wells in this field. We have identified a total of 20 drill locations using the horizontal technology. And so this is just applying a new technology in an old legacy field that with proven oil that's in the ground. So we don't have to go out searching for the oil. We're not going to be drilling wildcats. This is just plain vanilla, get the oil out of the ground and know it's there. With regard to the revenue statements, we send out a monthly statement along with your expense statement and a revenue check. So once the project is up and running in full, we'll do that on a monthly distribution basis. And then once we do the first 2 wells, then we'll determine how much we want to go forward with a remaining drilling program. And at which time we'll send out on a case-by-case basis what we call an AFE, an authority for expenditure, which will allow each participant the ability to participate on that particular well. And if you do, then you are in that cash flow for that well. And if you don't participate on that well, then you just don't participate on the cash flow for that well. So it's really gives you kind of a easy look at what's going on and gauge whether you want to continue to put money into the project, if you like it. And actually, I'm going to show some economics. I'm trying to get the economics up. This project could self-fund itself after the first 2 wells. And basically the cash flow could fund the drilling program. And that's what we believe. Let me see if I can get this spreadsheet up real quick just to give you an idea. Carson, I think you need to stop sharing for a second.
Let me stop sharing and then see if you can pull yours up.
Can you see the spreadsheet?
Uh-oh, Paul's in action. He's got it up.
Okay,
There we
good
go.
deal. Okay, so let me just talk through this real quick. This is the investment, what we call the CapEx schedule. And you'll see we have RB wells here. These are rework wells. This is kind of a timeline starting in May. We have some funds allocated to facilities upgrade, and then we average about 100,000 per well, do a couple wells a month. And these are the reworks, putting the wells online with new equipment and whatnot. Then we slip down here sometime around September and start our drilling program. We drill 2 new wells, and then most likely we'll be drilling 2 additional wells, we believe, because these first 2 are going to be very successful. So within a 1-year period, that would be about $7 million. And what that would look like on a production profile, this just gives you an idea on what we expect production wise. Here's the same wells across here. These are all rework wells. And then these are the new drills. And here we see 15 barrels a day and 30 barrels a day for 2 wells. And then we get over here, we're seeing 200 barrels a day. This is kind of on the low side for each new drill well. And then this number here is the expected ultimate recovery on those wells. And you can see about 200,000 per well on the new wells. So this is a Gantt chart, and it kind of just gives you a timeline on, as each well comes online, what your additional monthly production would be. And on the side here, this is a monthly production of oil. So you see we jump up from 1450 in May up to almost 25,000 barrels of oil by November. And so that's with a pretty aggressive little drilling program. And just in a short period of time, by 2029, we're almost, I got a little typo there, about 1 million barrels of oil just from this 4-well program. And as Chris said, we believe we can achieve about 4 million barrels of oil. So we can do about 4x on what's on the statement, but it's just to give you an idea of the program and how it can continue to grow and build. And let's see. And looks like my screen is locking up. There we go. Oh, so here's an income statement, which kind of corresponds with the what I just sent. This is based on 50% interest. And as you can see, there's 47 barrels a day, 91 barrels a day, 100 barrels a day, and it grows as we bring more wells online. 860 barrels a day, which is the 25,000 barrels a month. And then over here, you can see the cash flow. I'm sorry, this is the operating expenses. And then down here, you can see how the cash flow starts out in a negative because we're spending money in the field. This is your CapEx here, but it shortly turns positive. And just by the end of the year, we're already cash flowing. And this is a cumulative number, 650,000, 635,000. So here we're going into, by August of next year, this thing should pay out, and we're generating 700,000 to 600,000 or 700,000 a month. So it has a potential to really ramp up quickly. And so this is just to kind of give you an idea of economics just run out a few years. So we get to the end over here, we're talking about $34 million in revenues just from the 4-well drilling program and the 6-well workovers. We didn't put any more wells in here, but obviously the potential to do that is about 4x of that, the potential for the field. So that's just kind of a little quick on that program of the economics. So Carson, you want to get your slide back up there?
I can do that.
Okay. Or you can wrap it up on the last couple slides. Are you back up?
Yeah, I am. Hold on 1 second. All right. I think you left off right in here.
Yeah, so the last slide is just kind of a summary.
Do you want to go right here to project summary?
Sure. Yeah, so in summary, it's a simple program for activating shut-in wells and installing equipment and upgrading the field. That's really not rocket science. Exxon study shows 36 million barrels of original oil in place. 12 million barrels have been produced. There's 24 million barrels remaining. You never get all the oil out of a reservoir, but if we can get up to 45% of the original oil in place, that would give us 4 to 5 million barrels, which is a very conservative number. And most of that production has been what we call primary. We're not talking about water flooding or EOR technologies. That's another form of bringing out the oil out of here that hasn't been implemented. And as I said, the directional drilling is where the big money is going to be made in this field. So you really want to participate on that, because this field could be 1,000 to 2,000 barrels a day with just a few wells. And at $70 a barrel, that's a pretty substantial income. We have got a lot of interest in this project. It's selling out pretty quickly, so I'll let Carson talk all about that. But we appreciate your input and appreciate a chance to present this excellent project.
Yeah, absolutely. Anybody that's joining us late, earlier, Dr. Gerald Bailey, former Exxon Arabia CEO, is our chairman of Falcon Production. I'm a partner on the deal. Anyway, he got to speak a little bit. He's been on Varney and other shows online. Chris here that walked through the presentation, the technical presentation. He's the man behind the scenes. He's been out in the field, did most of the due diligence on these wells, all the hard work out in the middle of nowhere. Anyway, just rolling through everybody's experience here. I am a partner on the deal. Here's a little bit about me and my company. Here's Paul. He's the land manager. He just walked you through some of that. And this is our geologist right here, Mr. William Chesser, over 50 years experience. Here's a little bit about his background at BYU and his education. Been VP at several companies. Consulting, we got regulatory, Miller Consulting in Austin, accounting for the project, Petro Ledger, Houston, Texas. And other than that, I really don't have much. And, just wanted to see if, I guess, Kurt or whoever has anything else, if they, want to open it up to a few questions or whatnot. So.
Yeah.
You there,
I
Kurt?
think it was awesome, guys. Yeah, I think this was something that, again, I can't stress enough that at Think Realty, in the years that I've been here, 2014 to 2019, and then coming back in November, oil and gas is something that, I've had a ton of interest in from my time outside of working at Think Realty, and seeing great results from a lot of passive investors, whether they're using their IRA or their personal funds or getting those 1031 dollars. So I think that anytime we get new, it's exciting, and especially for our audience. I mean, I think some of the questions that, I think the point that was made very early by Jerry, essentially the energy's all around us. And I think when people actually think about that, it makes it more real, but it makes it a little less daunting, because a lot of times with real estate investors, we like things that we can see, feel, touch. We like that. We like those things like that. When you really relate it to energy, it's literally everywhere around us. And it's one of the essential needs, not a want, it's a need that society needs to survive. I think that is kind of the curtain coming down and the aha moment coming. So I think that some of the highlights that I've taken away is it's very clear that you guys have a ton of experience, wealth of knowledge in this particular asset class. and the knowledge that you guys have is second to none. So question that I have, as the host, I'm going to ask the first question,
All right.
without comparing, real estate, whether it's single family, multifamily, notes, whatever it is that people like to make their money in, office space, etc. What is it that you guys like the most about oil and gas? And I would say, what is it that you like about it? But also as it relates to that diversification play, maybe it is the missing piece in somebody's portfolio. Maybe it's if they have investments in their portfolio that are performing, what is it that you guys really like about this that makes it such a sound investment?
I'm going to give you my 15-second answer, and it's longevity. It can produce for a very long time. Different, in real estate, you're susceptible to interest rates and other things that affect the value. Oil and gas, it's just diversification as far as, hey, we have price of energy that can affect it, but, we expect that to remain strong for the time being. But I'll let Paul take it from there, or Chris.
Well, I can, let me address a couple of the questions that have come in. Someone asked about how long have we been doing this and how long is the investment. Falcon is a company that was put together just a few years ago by a group of industry professionals that kind of pooled our talents, such as Jerry Bailey and Bill Cheshire, who's a 50-year geologist. He's a veteran in the oil business. So there's really some seasoned professionals in our company. And our goal was to go in and find these fields that are kind of run down, neglected, fix them up and bring them up to par and get them up and running and back cash flowing. And we did that. Actually, we had a field that's about a 10,000 acre field, 70 wells. Last year, we actually we bought the field and we turned it around, got it making money, sold it off, did very well. And so this is actually our second project as this current team in Falcon. As far as the length of the investment goes, this field could produce for many decades. However, the interest is transferable. So anyone, if you have some personal situation, even if it's cash flowing good and you need to sell it and turn it to money, you can do that at any time. There's no restrictions on selling your interest. Let's see, another answer about do we get AFE calls or is this turnkey? Actually, the program, the first $1 million in this program goes towards the workover funds, and then the drilling funds come later. So that's not a cash call that would be right now. So that's why it's only $60,000 to go into the project. It gives you time to digest the cash flow and the project that we're doing. And then some down the line, probably 6 months, there'll be a cash call for the drilling money, and it'll be optional as to whether you want to participate on the new drills. They're very expensive, but you actually have a lot of time to decide whether you want to do that. And even if you didn't participate on the drilling program, just the cash flow from the project alone with the workover program is a 24-month payout. So it's still a good investment from that standpoint, but it's not the big money that can be made with the drilling program. So I hope I answered that question.
No, I think that was very thorough. Guys, I ask questions like this when we have panelists on here from a variety of backgrounds. If you can look into your crystal ball, what does the next 12 months, 24 months look like in your guys' opinion when we're seeing a little bit of volatility, a little bit of instability? We get asked all the time, is it going to be 2008 all over again? I think a lot of variables would say no. But when you guys are out in the field talking to people about passive investments, they want to know that. So what would be your guys' take on where do you think the market is going to go, and relate that back to this investment and how it is such a great asset class to invest in good times and in bad?
I think right now, as far as there being another 2008 is unlikely, being that there's a housing shortage. But as far as inflation being corrected quickly, you have major news outlets talking about the the decline of the US dollar, which is real now. A lot of other things that have affected inflation, and the raising of interest rates may actually, do nothing as far as correcting them. Eventually it will. But the problem with that is how far do we have to go before those interest rates correct inflation? Are we looking at 12% interest rates, 3 to 5 years down the line? I mean, I don't know. So, for me, it's like I said previously, with, real estate, it's always a good asset. If you own it cash, it's almost riskless. I mean, it's eventually going to go up. If you have too much leverage on it, you can get in trouble. With this, I mean, I see the price of oil staying stable for a very long time. These produce for a very long time. If there's any kind of decline in the US dollar, you already have Saudi Arabia and some other countries pulling away from what they call the petrodollar. This gives you a little protection from that, because it is a hard asset like gold, silver, or real estate, so, and it's 100% cash. There's no leverage involved in this deal. So there's no debt or anything like that. This is, you own it 100%, there's no interest rates won't affect the value of this deal. So anyway, Paul, do you want to add anything that I just said, or?
Yeah, I was, that's a good question. I was actually had a conversation with Dr. Jerry Bailey recently, and we were talking about oil prices, and he's kind of a global guru when it comes to oil prices and, the demand overseas and all the political, all the political things that affect the price of oil. And he seems to think that we're going to have over $100 barrel oil by the end of the year. He's pretty optimistic about oil prices, although it's going to come at a price to pay. Obviously, there's a lot of tensions in the Middle East and a lot of things that can affect oil prices. The Permian Basin is where about 50% of the United States oil is produced, and they're pushing it pretty hard right now, and they don't have the room to ramp up quite as much as some people would think. There's always a lag time between the price of oil and whether drilling begins or they quit drilling and equipment is stacked up, and it's just a vicious boom and bust cycle in the oil business. But I think Jerry's spot on, and he's pretty optimistic about oil prices for the next couple of years. And I agree. I mean, just even with supply and demand, it's pretty solid.
If there's one thing I could just add on top of that, if you're concerned about longevity or the next, I guess, couple years here in the short term with oil prices, is a couple things you can look at are the U.S. Strategic Petroleum Reserve. There's public data on that, and we've been heavily depleting it just to make up supply in the U.S. for oil. And even with the depletion of that by about half, I think, at this point, oil prices have held up pretty good. And the U.S. is going to have to make up those losses in reserves at some point, which just means even further demand in the future.
I could agree with that. There's some manipulation downwards as far as the oil price is concerned. The reasons why are pretty obvious. It's a matter of common sense, but they've pumped the oil reserve and depleted it down to nothing just to hedge inflation for the time being. But eventually that has to be replaced, like Chris is saying. So there's a lot of things that are saying, hey, oil prices are gonna either go up or stay up, for the time being. So anyway.
Awesome stuff, guys. How can everybody get a hold of you? What's the best way? What's the best mechanism?
Oh, I mean, they can text or call me. My phone number is I can put it up on the screen, or Paul. You can You can text me at this number or call me, either one. I'll pull it up. It's right down here at the bottom of this slide. Am I sharing my screen right now?
No.
Not
Let
yet.
me, not yet. Okay. Let's go right here.
Perfect.
Yeah, you can text or call me at this number and or shoot us an email at info@passive.investments. Phone number for me is 214-251-8551. It's Carson Jones. And that's 214-251-8551 or info@passive.investments. And Paul, if you have any contact information you want to share, go ahead and,
Well, as we're the operator of the project. Falcon Production is actually a licensed bonded operator with the Railroad Commission. And so we will actually be the hands-on operation side of things. Our website is falconproductionllc.com. You can check a little bit about us there. We're available, for any technical questions. If anyone out there is wanting to get, into the technical side of it, the geology, the engineering, whatever, we certainly can set up a meeting on that end. Carson is handling all of our financial side of the fundraise and all that. He's our marketing arm. So go through him if you want to subscribe. But on the technical side, we're certainly happy to address that.
And I can vouch for Carson. The guy picks up the phone. So that's a big thing. I say that. I don't mean to be cute when I say that, but I think that that's something that extends to the credibility that, we try to develop like, trust, and respect with people that we invest with. And one of the biggest things is timely responses. So anybody who's listening, just trust me when I tell you that if you reach out to Carson, he's going to respond, whether it's through call, text, email. Dude picks up his phone, dude answers emails. So that goes a long way. So I can't state that enough. That's critical, that when we're talking about investing with people and building relationships, that's step one, is responsiveness, and they've got it down pat. So thank you guys so much for being here tonight.
Yeah.
I can't encourage people enough. Reach out, learn more, build the relationship. And if it makes sense for you to invest your dollars, do so. But here at Think Realty, we try to bring on some of the people that we view as the best of the best. And in terms of people that I've met, I've known these guys for a little bit, and they pass a lot of the criteria that I look for. So guys, thank you guys so much for being here tonight. We'll get this up on our YouTube channel. We'll start blasting this out, but excited to be working with you guys. Look forward to seeing you in the future. And again, everybody, thinkrealty.com if you want to learn more about Think Realty and our events, but please take advantage. Reach out to Carson, reach out to the team, and learn more about what they have going on. It could really be the difference between a successful 2022 and beyond, or maybe not so much. So pick up the phone, call these guys. Can't recommend them enough. So thank you, everybody.
Absolutely. Yeah. Thank you, everybody,
now
for your time. Thank you, Kurt.
Thanks, Kurt.
Yeah, thank you.
No, you guys
All right.
are very welcome. Again, this is good stuff for us, because again, we haven't had this before. So I get excited about new. And what sets it apart for me is you guys clearly know what the hell you guys are talking about. So that's a good thing.
Awesome.
So
Yeah,
appreciate you
absolutely.
guys
Awesome.
very much. Everybody have a great night. We'll be back again next Wednesday with another Think Realty webinar. Reach out to Carson and his team. Can't say it enough. Have a great night, everyone. Be safe, be healthy, be happy, and we'll see you guys next time. Thank you.
All righty. Thanks, guys.
Bye.
Thank you.